Every time payday rolls around, you probably feel a familiar wave of anxiety. You log into your bank account, look at the deposit, and immediately start doing mental math to figure out where every single dollar needs to go. You pay your rent, cover your utility bills, transfer a little bit into a savings account, and hope there is enough left over to actually enjoy your life. This manual process requires relentless discipline, and relying on sheer willpower month after month is exhausting. When you are constantly forcing yourself to make the right financial choices, decision fatigue sets in, often leading to missed opportunities and stalled progress. But what if you could completely remove human error and emotional hesitation from your money management? By demonstrating how a few simple digital rules can simplify your life, you can transform a stressful chore into a seamless, invisible machine. This is the power of financial automation, a system that works tirelessly in the background to accelerate your journey toward lasting financial security. Financial automation is the process of setting up automatic transfers, payments, and investments so that your money moves exactly where it needs to go without requiring your active intervention. Instead of relying on your memory or your motivation to save and invest every month, technology does the heavy lifting for you. You make the correct financial decision exactly once, set the parameters, and let the system execute that decision indefinitely. It is the ultimate strategy for building effortless wealth, ensuring your money is always working for you even while you sleep. The secret to why this works so incredibly well lies in human psychology. According to recent data from behavioral economists, humans are naturally wired for immediate gratification, making it incredibly difficult to consistently prioritize long-term future goals over short-term desires. When the money sits idle in your checking account, the temptation to spend it on something immediate is overwhelmingly strong. Automated systems bypass this psychological trap entirely by routing your money to its designated purpose before you ever have the chance to spend it. The first foundational step in building this invisible wealth machine is automating your fixed expenses and bill payments. You should start by listing every recurring monthly obligation, such as your rent or mortgage, utilities, insurance premiums, and minimum debt payments. Then log into your service providers or your primary checking account and set these to auto-pay exactly 1 or 2 days after your paycheck clears. This ensures that your essential living costs are always covered immediately, entirely eliminating the risk of late fees or service interruptions. Automating your bills does more than just save you time and mental energy. It directly protects and improves your credit profile. Your payment history is the single largest factor in determining your FICO score, which dictates the APR you will be offered on future loans or mortgages. By guaranteeing that every single bill is paid on time, every single month, you are actively building a pristine credit history. That stellar score will eventually save you tens of thousands of dollars in interest over your lifetime. Once your baseline obligations are handled, the next vital phase is automated savings. This is where you implement the golden rule of personal finance. Pay yourself first. Instead of waiting to see what is left over at the end of the month to put into savings, you schedule an automatic transfer to occur the moment you are paid. You want to direct this money into a high-yield savings account that is completely separate from your daily checking account, creating a physical and mental barrier between you and your cash. Your immediate goal for these automated savings transfers should be building a robust emergency fund. Financial experts generally agree that you need 3 to 6 months of essential living expenses safely tucked away to protect yourself against unexpected job loss or medical emergencies. Because the transfer happens automatically, this critical safety net grows steadily in the background without any agonizing internal debate about whether you can afford to save this month. It simply happens, building your financial resilience week by week. With your bills paid and your emergency fund growing on autopilot, you are ready to graduate to the most powerful aspect of this system: automated investing. Saving money protects you from short-term financial ruin, but investing is what actually builds generational wealth over the long term. If you have access to a workplace retirement plan, such as a 401k, you already have the absolute best starting point for automated wealth building available to you. Contributions to a 401k are deducted directly from your paycheck before the money even hits your bank account. When you automate your investments, you unlock the full, staggering potential of compound interest. Compound interest is simply the interest you earn on your initial investment, plus all the accumulated interest from previous periods. It is the snowball effect applied to your money. If you invest $300 a month starting at age 25, assuming a historical average market return of 8.5%, that money will grow to over $1 million by the time you retire, largely because of the math of compounding. But where exactly should these automated contributions go? For the vast majority of people building wealth from scratch, the most effective vehicle is an index fund. An index fund is a type of investment that pools your money to buy a tiny piece of every company within a specific market benchmark, like the largest 500 companies in the United States. Instead of trying to guess which individual stock will be the next big winner, an index fund allows you to own a slice of the entire profitable market. Investing in index funds automatically provides you with diversification. Diversification is the risk management strategy of spreading your money across many different types of investments so that a single failure does not wipe out your portfolio. Because an index fund inherently holds hundreds or even thousands of different stocks, your risk is drastically reduced. If one company in the index goes bankrupt, the impact on your overall wealth is minimal because the other hundreds of companies are there to balance it out. Once you set your 401k or personal brokerage account to automatically purchase these broad market funds every month, that powerful diversification begins working for you instantly. The echoes of those early savings lessons still resonate here. You are paying your future self first, but now you are doing it with assets that historically appreciate over time. You no longer have to watch the financial news, analyze corporate earnings reports, or worry about picking the perfect moment to buy. This consistent, automated purchasing schedule naturally implements a strategy known as dollar cost averaging. Because you are investing a fixed amount of money at regular intervals, regardless of what the stock market is doing, you end up buying more shares when prices are low and fewer shares when prices are high. Over years and decades, this smooths out the volatile peaks and valleys of the market, entirely removing the dangerous temptation to panic sell during a downturn or greedily buy during a speculative bubble. If you do not have an employer-sponsored plan, or if you want to invest beyond it, you can easily replicate this invisible machine using an IRA or individual retirement account. You simply link your primary checking account to your IRA provider and schedule a recurring monthly transfer. Inside that account, you can automate the purchase of an ETF or exchange-traded fund, which functions almost identically to an index fund but trades like a regular stock throughout the day. You might also choose to utilize a Roth account for your automated investments. A Roth IRA or a Roth 401k allows you to contribute money that has already been taxed, meaning your investments grow completely tax-free, and you will not owe the government a single dime when you withdraw the money in retirement. Setting up automatic recurring contributions to a Roth account is one of the most mathematically devastating moves you can make in the pursuit of long-term financial independence. Automating your investments into these diversified, appreciating assets is absolutely essential for combating inflation. Inflation is the gradual loss of purchasing power over time, meaning $1 today will buy you less goods and services 10 years from now. If you leave all your wealth sitting in cash, its hidden value is slowly eroding year after year. By continuously and automatically funneling your money into the broader market, you ensure your wealth grows at a rate that outpaces the rising cost of living. To truly accelerate your wealth building, you can take financial automation one step further by utilizing auto-escalation features. Many modern retirement platforms and investment accounts allow you to automatically increase your contribution rate by 1 or 2% every single year. You can time this automatic increase to coincide with your annual raise or performance review at work. Because your income is going up at the exact same time your savings rate increases, you will never even notice the missing money in your paycheck. This auto-escalation tactic is the ultimate defense against lifestyle creep. Lifestyle creep occurs when your discretionary spending naturally rises to meet your increased income, leaving you earning a high salary but still living paycheck to paycheck. By automatically capturing a portion of every raise and routing it directly into your diversified investment portfolio, you guarantee that your standard of living and your future wealth are growing simultaneously. The system protects you from your own natural urge to upgrade your lifestyle too quickly. To truly grasp the magnitude of this strategy, consider the tale of two different professionals, both earning the exact same salary. The first professional relies entirely on manual money management, constantly promising to invest whatever is left over at the end of the month. Inevitably, life gets in the way. Car repairs, spontaneous dinners, and unexpected expenses constantly drain their checking account, leaving their investment portfolio painfully stagnant and their financial anxiety at an all-time high. The second professional spends exactly one Saturday afternoon setting up a comprehensive financial automation system. They route 20% of their income directly into a diversified portfolio, automate all fixed utility bills, and set their credit cards to auto-pay the full statement balance. They never have to actively decide to save money. The system simply executes their master plan. 10 years later, without ever having to exert daily willpower, the second professional possesses a massive compounding net worth, while the first is still struggling to start. Even if you have a highly variable income, perhaps as a freelancer or a commissioned sales professional, you can still harness the power of this automated machine. Instead of fixed dollar amounts, you can use modern banking apps to automatically transfer a specific percentage of every deposit you receive. If you set a rule to instantly sweep 15% of every incoming payment into a tax savings account and 10% into an investment account, you maintain the same effortless discipline regardless of how much you earn that month. While financial automation is designed to be a set-it-and-forget-it strategy, it does require a brief periodic review. You should plan to sit down for just 30 minutes once or twice a year to audit your automated systems. This is your opportunity to ensure your auto-pay connections are still active, your credit cards have not expired, and your investment contributions are fully maximizing any available employer match. This tiny maintenance routine keeps your invisible wealth machine running smoothly. The true beauty of automating your finances is not just the mathematical certainty of compound interest, it is the profound psychological freedom it grants you. When you no longer have to spend your precious mental energy agonizing over every single dollar, you free up your mind to focus on things that actually matter to you. You can focus on advancing your career, starting a side business, or simply enjoying your life, knowing with absolute certainty that your financial future is actively building itself in the background. Wealth is rarely built through massive, dramatic windfalls or lucky stock picks. It is built through the relentless, boring consistency of executing the right behaviors over decades. Financial automation guarantees that consistency. By intentionally setting up rules that bypass human error, you construct an unstoppable financial engine. You owe it to your future self to stop relying on willpower and start relying on systems. Take the time to automate your money today and watch as your path to lasting financial security becomes entirely effortless.